Welcome back to Short of Inform. I am Garrett.
I'm Daryl.
Daryl, what are we talking about today?
Today, we're going to be talking about IRAs. And with us today, we're going to have a guest speaker. Her name is Amanda Meeker. She is a certified IRA professional.
Welcome to our IRA episode. This is Amanda today. She's going to be subbing in for Daryl.
Hi Garrett, my name is Amanda. I am the IRA specialist at Jersey Shore Federal Credit Union, and I'll be answering some common questions that people have about IRAs.
All right, so question number one today, the most common, what is an IRA?
So an IRA stands for Individual Retirement Account, and typically it is a special account that is established for an individual's retirement.
All right, so now that we know what IRAs are, what are the different types of IRAs?
So there's two main types for IRAs. We have the traditional IRA and we have the Roth IRA.
Okay, so what's a traditional?
So the traditional is the most common. It's basically before tax contributions, meaning you put the money in before you get taxed on it, and then when you do your distributions, they are taxable.
Okay. All right, so what is a Roth IRA then?
So the Roth is basically the complete opposite, which is you put your money in after you've paid Uncle Sam, and then when you withdraw money, when you become of age, then it's tax-free.
So a person that has an IRA is going to have to contribute money. So is there limits to these contributions?
Yes, so it's a little different for traditional and Roth. Traditional, you have up until you turn 70 and a half to contribute. You have to have earned income, so you have to have a job, you have to make money to contribute. Under 50 is $6,000 this year. It does change year to year. And then you have over 50, which is known as a catch-up contribution. So you can do an additional $1,000, which makes it $7,000.
All right, so that's the contribution rules for traditional.
Yes.
What are the Roth contribution limits?
So Roth is a little more difficult. It is based on your MAGI, which is your modified adjusted gross income, as well as your filing status. Are you filing joint? Are you filing single? Does your joint spouse have their own IRA? So we basically say that you should talk to your tax advisor about this one to make sure you don't over-contribute to your Roth.
That's always the best advice.
Yes, absolutely.
So now that we figured out the limits of the contributions, is there a deadline to make them?
Absolutely. So it is going to be April 15th, unless that falls on a weekend or a holiday, then it's that next business day. You can make what is known as a prior year contribution. Most people think that after December 31st, the end of the year, that you can't contribute again for that year. That's false. You can contribute all the way up until tax day, and you can make what is known as a prior year contribution. This is typically what people do. They'll file their taxes in January, February, and they'll take their income tax and put it towards your prior year contribution.
Oh, all right, cool. All right, so after you contribute all this money to your IRA over years, so how does the distribution process work?
So it's different for traditional and Roth, of course, because we discussed the difference between the two when you're contributing and stuff. However, with traditional, if you withdraw your funds prior to 59 and a half, you will receive that penalty. It's typically 10%. We do recommend that you talk to your tax advisor before you do anything. There are many ways that you can avoid that, such as disability, death. However, you want to basically save this money, of course, because it's for retirement.
Right.
When you are in the ranges of 59 and a half to 70 and a half, you are able to withdraw it penalty-free. However, they're not requiring you to take it out at that point.
Right. So it's up to you at that point.
Yes, it's up to you. They think that you're of age to start taking the money out. However, they're not requiring it at that point.
Gotcha.
As I said, this is traditional, so once you turn 70 and a half, the government definitely starts wanting their cut of their money, because remember, it went in penalty-free, tax-free. So now they want to collect on that taxes.
They're trying to get their cut.
Absolutely.
Right.
So when you turn 70 and a half, you are going to be what is known as doing RMDs, which is required minimum distributions. And that is basically the government saying, okay, you have to take a certain amount each year to fulfill that tax payment.
Okay, wow, okay. So those were the distribution rules for a traditional.
Yes.
How about a Roth IRA?
So Roth is different, of course, because you already paid the government your taxes. So they don't require you to take money out at all. You can keep it, until you pass. You can keep it until you're 90. There's only two different types of requirements. You have to have the IRA open for 5 years, and then Around 59.5 will be when you're allowed to at least withdraw it tax-free, penalty-free as well.
All right, so when you're applying for an IRA, is there any specific information you should want to include or any additional information you want on there?
Of course. So the biggest thing that people tend to not think about in the future is beneficiaries. No one wants to think of the worst case scenario, but of course,
Good to plan
situations
for
happen.
it.
Absolutely.
Right.
So I always encourage you to do any type of beneficiary, which is basically someone that will get your assets in the event that you pass. It makes it a lot easier for your loved ones in the event that you do pass, and it's not as difficult for them if you have something listed stating who gets your assets.
Right, best to plan for the future.
Absolutely. You don't want to think that's going to happen, but of course it sometimes does. So.
All right. Okay, so is there anything you can't do with an IRA with those funds?
Yes, so they're basically known as prohibited transactions. It means that it's improper use of an IRA. So the IRA, of course, is for retirement, so you can't borrow from your IRA and then pay it back. Any money that you put into it afterwards is another contribution for the year, but you can't use it against it as a loan, and you can't use it as security for another type of loan.
Gotcha, okay. So an IRA is used for retirement. So can I have an IRA and a 401k?
Yes. It makes it possible to save as much in tax advantage retirement accounts as the law allows. So you definitely want to double up with any employer sponsored plans as well as your own retirement plans. You can even have a Roth and a traditional at the same time as well. And let's just say that your you leave your employer and you have those funds, you can do transfers and rollovers to a traditional or Roth IRA of your own.
All right, so you just mentioned transfers and rollovers. So what are those actually?
So they really are one and the same. It's just basically how the assets get from point 1 to point 2. And you basically will just let your other financial institution know or your employer that you want to move your assets from their place to wherever you found it yourself. And they're going to either, for transfers, they're going to either submit it to the other financial institution with no middleman, meaning the IRA owner does not even see the check. It just basically comes right to the other financial institution.
Okay.
Rollovers are where the IRA owner basically is able to hold that check, and they have 60 days to deposit it after it's issued. If it is not deposited after 60 days, then it is basically questionable.
Okay.
As to where the funds went.
So really hit it before the 60 days.
Yes, because
Gotcha.
then they think that you've used it and there's a reporting issue.
Okay, so perfect. So remember that, under 60 days.
Yes, just for the rollover.
Right.
Since you have the assets, they don't know what you've done with the assets. Transfers, there is no time frame.
Perfect. Okay. All right, so we've answered a lot of questions here today. If they have any extra questions, any viewers have any extra questions, what resources do they have?
So they can always stop in and talk to me. I'm always
Right.
here.
Amanda's always here. She's happy to talk to you.
Absolutely. You can also talk to your tax advisor. They're always willing to help. But last but not least, if you want to just do your own research, you can go to the IRS website and just in the search box type in IRA and it'll pop up immediately with FAQs.
Perfect. All right. Well, Amanda, thanks for joining us today.
Thank
Thanks
you,
for filling
Garrett.
in for Daryl.
Of course, yes, anytime.
All right, and thank you for watching Sure to Inform.